Yes, good morning, everybody. Welcome back to this session on mutual fund. I am CS Vivek Banerjee, and in today's lecture, I will be taking the assignments on mutual funds. So, if any question, good morning, Satish. Good morning, Shruti. So, if there is any question on your previous lecture, please go ahead with it. Otherwise, I will begin with the assignments. So, I'll just give a brief of what we have studied during our previous lecture. First of all, we understand the concept of the mutual fund with the help of a practical example. And then we proceeded to various types of fund, equity funds, debt fund, balanced funds, and certain open-ended fund and closed-ended funds we have also discussed. We have discussed some of the uh, terms which are used in the mutual fund, such as net asset value, expense ratio, trail commission. We discussed side pocketing and tracking error also. So, and obviously NAV also, we will doing practical questions on NAV and the return of the mutual fund in our this assignment section. So, yes, good morning, Viraj. Good morning, Shailesh. So, if any other query or shall I proceed with the assignment section? Just give me a second. Yes, any question? So, fine. So, this is the first question in front of you. Question number one of the assignment, that Mr. A can earn a return of 16% by investing in the equity shares on his own. Okay. And now he is considering a recently announced equity based mutual fund in which initial expenses are 5.5% and annual recurring expenses are 1.5%. How much should the mutual fund earn to provide Mr. A return of 16%? So, what do you understand by this question? The question is asking that Mr. A can earn a return of 16% by individually investing in the stock of a particular company. Now, if he wants to invest in a mutual fund and he expecting a return of 16%, then the same return which he is expecting by investing in the equity shares, then how much the mutual fund should earn in order to provide Mr. A the return of 16%. So obviously the mutual fund has to earn more, because as we have studied that there are certain expenses on the part of the mutual fund which they deduct from the return and give the final return to the you can say unit holders. So mutual fund have to earn more. So how much more the mutual fund should earn in order to give a return of 16% to the equity to the mutual fund investors? Let us see. It is actually the question number one. Fine. So what is the A's likely return? A's likely return. It is actually 16%, which the mutual fund is expected to give to A. And what is mutual fund's return? Mutual fund is obviously expecting a higher return in order to pay a 16%. So this mutual fund's A's return should be 94.5% of the total income. 94.5% of the total income, because 5.5% of the initial expenses. So that much initial expenses has to be considered. So mutual funds return should be 100%. So that how much this 100% return will be calculated? This 100% return will be calculated by It will be 16 into 100 upon 94.5. So let us calculate this. It is coming to 16.93. So in order to give a return of 16%, the mutual fund has to earn now 16.93%. But there is another aspect in the question, which is annual recurring expenses, which are 0.5%. See, in the question, it is mentioned that this is the annual recurring expenses. Annual recurring expenses are 1.5%. This has also to be considered. So since this is annual recurring expenses, this has to be straight away added to 16.93%. So now mutual funds total return is mutual funds total return is 16.93%, which I have just calculated, plus this 1.5% recurring expenses. So 16.93 plus 1.5, let us calculate it. It is coming to 18.43. 18.43. So this is the return which the mutual fund has to earn in order to give a return of 16%. I hope this is clear to you. There is another way to calculate this with the help of a formula. So alternatively, there is an alternative calculation also, alternative method to compute this. So alternatively, let us say, you can say, let us suppose A's return is equal to R1 and mutual funds return is equal to R2. Okay. So we have to calculate the mutual funds return. So R2, that is mutual funds return, is equal to 1 upon 1 minus initial expenses into R1 plus recurring expenses plus recurring expenses. Now put the figures into the formula. 1 upon 1 minus what is the initial expenses? Initial expenses 5.5%. So it will come to 0.055 0.055 multiplied by R1. What is the return of R1? It is 16 and recurring expenses is 1.5%. So it will be, let us calculate this. So it is 1 upon 0.945 multiplied by 16 plus 1.5. So again calculate it. 1 upon 0.945 multiplied by 16 plus 1.5. So it is the same answer coming to 18.43. 18.43. So I hope it is now clear to you, this portion. It is a very simple question. Okay. Now come to the second question of the assignment. What the second question is saying? Second question is saying that a mutual fund that had a net asset value of 20 at the beginning means this is a opening NAV 20. It made income and capital gain distribution of 0.0375 and zero point zero 0.03 per share respectively during the month. Means during the month, uh, it made a income of 0.0375 and capital gain is 0.03. And then the closing NAV is 20.06. So you have to calculate the monthly return. So let us solve this question. The question number 2. So answer 2. So monthly return. So what is the formula of the how to calculate the return? You have to calculate the return by using this simple method: closing NAV minus opening NAV plus dividend plus capital gain divided by opening NAV. And if we are calculating the percentage, then we have to multiply it by the 100 also. Now let us see what is the closing NAV which is given in the question. Closing NAV, it is given 20.06 minus opening NAV, which is 20 plus dividend. Dividend is or income is 0.0375 plus capital gain 0.03 divided by opening NAV, which is 20 rupees. So let us calculate the monthly return. So it is coming to 0.006375. Okay, so we multiplied it by 100. So percentage, it is coming to about 0.6375. 0.6375. This is the monthly return. So question is, it is asked in the question that you have to calculate the monthly return. If yearly return was required to be calculated, then yearly return can also be calculated by this. For yearly return, you simply have to multiply it by 12 because it is a return of 1 month. So 0.6375 multiplied by 12. So it is coming to about 7.65%. 7.65%. So this is the monthly return and yearly return. Monthly return is 0.6375 and yearly return is 7.65. This is the first part of question number 2. Now come to the second part. Second part is asking about the expense ratio. So expense ratio, you know how it is calculated. Expense ratio are certain expenses which are incurred by the mutual fund for the day-to-day expenses. For example, they pay to the mutual fund managers, they pay for the research and analysis, they pay for the travel costs, they pay for the, you can say, various other commissions also. So these are actually expenses on the part of the mutual fund. So expense ratio is expenses, whatever expenses are part of the asset, that is the asset, net asset value. So expense ratio can be calculated as, in this case, is equal to expenses divided by average NAV. Average NAV. Average NAV, because in this question, if you see that the opening NAV, this portion, opening NAV and closing NAV, this portion, both are given. So we have to average this. Closing opening NAV rupees 20, this portion, and closing NAV, that is this portion, 24. And expense per unit, this is 0.5, is already given in the question. So it will be, first of all, let us calculate the average NAV. So average NAV is opening plus closing, 20 plus 24 divided by 2. So it will come to 44 by 2, 22. So expense ratio will be expenses given in the question is 0.5. So 0.5 divided by average NAV, which is 22. So let us calculate it. So it is basically coming to 2.27. 2.27%. So this is the expense ratio. So how we have calculated the expense ratio? The expenses upon average NAV. Average NAV, opening plus closing upon 2, it is come to 22. Expenses given in the question, 0.5 divided by 22. And the answer is 2.27%. So this is about question number 2. Actually, what happens? This is in the mutual fund. Dividend is there. Sometimes the mutual fund distributes dividend to its various unit holders, and there is appreciation in the NAV. So, what is the difference? It is also a capital gain, and sometimes there is income, whatever you can say, increases in the, you can say, unit value. Some portion of it is distributed to the, you can say, investors. So that is what his capital gain is. So capital gain is also distributed to the investors and dividend is also distributed to the investors. Yes, Mansa, good. That is 2.27% expense ratio. Now come to question number 3. Let us first read the question number 3. So it is given that, and good morning, Tanisha. So in question number 3, the investor purchased 300 units of a mutual fund at 12.25 per unit on 31st December 2019. Okay. So this is the purchase price of an investor, and 31st December 2020, he has received 1.25 as dividend and 1 as capital gain distribution per unit. So basically, this is the, you can say, this is the opening NAV. And in the first point, you are required to calculate the return on investment if the NAV, the closing NAV, because opening NAV 2019 given 2.25 and the closing NAV is also given on 31st December 2020, it is 13. Okay, so how return is calculated? Return is calculated, that is closing minus opening plus dividend plus capital gain upon opening NAV. So let us calculate the First portion first. So return on investment is equal to same formula, closing NAV minus opening NAV plus any dividend plus capital gain. I'm writing in a short form, DIV for dividend and CG for capital gain divided by opening NAV. So closing NAV, it is closing NAV, it is given 13 minus opening NAV 12.25. It is given in front of you, that is opening NAV. It is 12.25, closing 13 is given, 1.25 as dividend and 1.5 as 1 as capital gain. So plus 1.25 plus 1 divided by opening NAV, which is 12.25. Let us calculate this. It's coming to 24.49. It's coming to 24.49. Okay, so I hope this portion is more or less clear. Now come to the second portion of this question number 3. 24.49. Okay, good. Fine. Now come to the second portion of question number 3. What it is asking? It is asking, let's look at the second portion. The return on investment as on 31st December 2020, if all the dividends and capital gain distributions are reinvested into additional units of the fund at 12.5 per unit. It means the investor does not want the dividends and capital gain to be distributed. It wants the dividend and capital gain to be reinvested. Actually, practically what happens most of the time, dividend and capital gains are reinvested into the units, because when the mutual fund declare dividends, the amount is very less in compared to the stocks and shares. That is why most of the time investor prefer that whatever the dividend and capital gain is there is reinvested into the additional units. So let us find out the return on investment in this situation. If all the dividends and capital gain distributions are reinvested into additional units of the fund at 2.5 per unit. Now, what is the, let us come to the second part. Now, what is the total return by way of dividend and capital gain? It is, dividend is given in the question. It is 1.25 is dividend and 1 is capital gain. We have just calculated. Okay, 1.25 plus 1 is equal to 2.25, right? It is 2.25 per unit. Okay. Now, now what is the total amount which is to be reinvested? What is the total number of units? Total number of units given in the question. That is this 300 units. Okay. So 300 units. So 300 units, it will multiply it by rupees 2.25 per unit. Let us calculate this. It's coming to 675 rupees 675. This is the total return by way of dividend and capital gain, rupees 675. Now, these has to be, you can say, converted into units. How much in units? First of all, it will be converted into units, and then the total units are reinvested. Total units will be reinvested. So let us calculate the total number of units. It will be total units to be reinvested. Total units to be reinvested is equal to rupees 675 divided by reinvested at what price? This price is given 12.25 per unit. This is the price at which the mutual fund will reinvest. It's 12.5. So it will be divided by 12.50 per unit. So we can, by this, we can find the total units which has to be reinvested. So let us calculate it. 675 divided by 12.5. It is coming to 54 units. Okay, now what is the total number of units? Earlier it was 54, now it is 300. Now total units are will be 300, 300 which was earlier, now 54. So total number of units are now 354. Now let us calculate the return of investment. So the return will be actually closing NAV minus opening NAV because the dividends are already reinvested. So now calculate the return on investment. So it will be closing minus opening. Let us calculate the closing. Now, what is the total number of units? Total number of units are now 354. Okay, we have just calculated 354 units. And what is the closing NAV per unit? Let us see in the question. It is given. It is 13. This portion 13. So 354 units multiplied by rupees 13 per unit minus earlier opening NAV. What was the earlier number of units? The number of units was 300 units. Okay. 300 units multiplied by what was the opening NAV per unit? Opening NAV per unit was 12.25. Okay, so let us calculate this. Coming to 4602, 354 multiplied by 13. And let us multiply 300 into 12.25. Is coming to 3675. So what is the total return which is coming? 4602 minus 3675. It is coming to 927. So this is the return, but we have to calculate in the percentage term. So let us calculate in the percentage term. It will be 927 divided by opening NAV. Opening NAV, we have calculated 3675 multiplied by 100. So 927 divided by 3675 multiplied by 100 is 25.22. 25.22. So let us check this figure is also coming or not. Can check on your behalf also. Fine, Satish, 25.22. Others are also getting the same figure, I hope. Yeah. So in the second aspect of the question, how we have proceeded, what is the second, first part was relatively easy. You have to calculate the return. Simple formula, closing NAV minus opening NAV plus dividend plus capital gain divided by opening NAV. Okay. Now you have to calculate the return on investment on the second part also, but second part is different. It says that all the dividends will not be distributed. It will be reinvested into additional units. So in that situation, what will be the return on investment? So first of all, we calculated the total return by way of dividend and capital gain, and then we converted it into units and then calculated the return. How we did that? Just see. Total return was 1.25 plus 1. It is 2.25 per unit is the total return. Then total return by way of total investment, then it is 300 units, which is given in the question, multiplied by this 2.25 we have, and we got the total amount, which is 675. So when we divide this 675 by the investment amount, it's given in the question that at 12.25, the additional investment has to be made. So this 675 is divided by 12.5 per unit. We got the total units which is to be reinvested, which is 54 units. Now earlier it was 300 units. Now it is 54 units. So we will add it. Total number of units are 300 plus 54, which is 354. So what will be the return on investment in this situation? The same process, uh, closing NAV minus opening NAV upon opening NAV into 100. So first of all, we'll calculate the return, uh, which is total closing NAV. We calculated by 354 units we just got and 13 per unit. It is the closing NAV per unit. And we deducted it from the opening NAV. So total closing NAV came to 4602. We deducted it by opening NAV, which is 3675, and the final figure we got is 927. So 927, we divide it by the opening NAV, which is 3675. 927 divided by 3675 into 100. So the return on investment which is coming is 25.22. That is 25.22%, I would say. Please. 25.22%. Fine. Any question on this, or otherwise I will proceed further? Okay, fine. Now come to the fourth question. Let us read the question, try to understand, and then we will solve it. The mutual fund, Cinderella Mutual Fund, name of a mutual fund is Cinderella, and it has the following asset. It invested in the following asset in scheme Rudolph as on 31st March 2020. So companies in which it invested is this four companies: Nairobi, Dakar, Senegal Limited, and Cairo Limited. Number of shares is given in front of you, and the market price per share is also given. And total liabilities are also given in this case. Total number of units are given, and liabilities are also given. That is accrued expenses 2,50,000, other liabilities 2 lakh. So assets are given, means whatever companies in which it is invested is the, you can say it is the assets, and these are accrued expenses and other liabilities. These are liabilities. So how net asset value is calculated? Total assets less total liabilities divided by the number of outstanding units. So total asset we will calculate, total liabilities we will be calculate, and total number of units are already given in the question. It is 10 lakh per unit. This is given in the question itself. So you have to calculate the NAV. What the question asks is NAV per unit of scheme Rudolph. So let us proceed with the question. Okay, welcome, Ansha. Now, let us proceed to this question number 4. Fine. Now, company, number of shares, market price per share, and the last it will be the NAV. It will be the total NAV. So I will give the name of the company in a short form. Not I will write it. So Nairobi, N for Nairobi, this D for Dakar, and this Senegal, and this Cairo. Number of shares 25,000. Market price per share rupees 20. In case of Dakar, it is 35,000 shares have been invested. Market price per share rupees 300. In Senegal, 29,000 shares have been invested. Market price per share rupees 380. And in Cairo Limited, 40,000 shares are invested. And the market price per share rupees 500. So let us calculate it. We will multiply this number of shares with the market price. We will not, we will write it, preferably we will write it as the investment value. Okay, now let us multiply it. 25,000 multiplied by rupees 20 is equal to 5 lakh. Is coming to 1 crore 5 lakh. Let us calculate it for Senegal. 29,000 multiplied by 380. It is coming to 1102. Let us calculate for Cairo. 40,000 into rupees 500. 2 crore. Fine. So now let us calculate this total value of the shares. It will be 20 lakh plus 1102. So it is 4 crore 20 lakh 20,000. Write it clearly. This aspect is coming to 4 lakh crore 20 lakh 20,000. I hope you are getting this same figure. So this is what is the total assets. So these are total assets. Let us deduct the liabilities. Less liabilities. So under liabilities, first of all, liabilities are given in the question itself. Let us see. Accrued expenses, this is 2,50,000, and other liabilities 2 lakh is also given. So we will less accrued expenses. Accrued expenses, which is given 2,50,000. And other liabilities. Other liabilities, this 2 lakh. Now calculate it. Total assets less liabilities. It will be the net asset value. So 4 crore 20 lakh less lakh 50,000 less 2 lakh. So it is coming to 4 crore 15 lakh is 70,000. 4 crore 15 lakh 70,000. It is the net asset, net assets, you can say. Net assets. Total net asset value. You can also put it that way also. So now calculate the net asset value per unit. You have to calculate NAV, net asset value per unit. So it will be total assets, that is 4 crore 15 lakh 70,000 divided by outstanding number of units. So what is NAV? Total assets minus total liabilities we have already arrived at. This is total assets we have calculated. Okay. And total liabilities we have also calculated. So from total assets, we deduct the total liabilities. The final figure which is there is 4 crore 15 lakh 70,000. So this is the total assets. And in order to calculate NAV per unit, we have to divide the total net assets, total net asset divided by the total outstanding number of units, which is given in the question itself. Total outstanding number of units, this is rupees 10 lakh. So let us calculate this. It is coming to 41.57. So NAV is 45.57 per unit. Okay. So I hope it is clear to you. Simple question of NAV. Any question? 41.57. Good. So now you have. Yes, it is the market cap, Ansha, which is 4 lakh. Because when we multiply the number of shares with the current market price per share, it is the market cap. Now come to question number 5. Read the question carefully. Mutual fund company has the following asset under it on the close of business as on 1st of February. So figures the market price, you can observe that the market price of 1st February is also given and the market price of 2nd February is also given. The same question is same as to the previous, almost same up to this portion. That is, number of shares are given, market price for 2 days are given. 1st February 2019 and the 2nd February 2019. Okay, fine. Total number of units are given 6 lakh. So we can calculate the NAV. So first portion, you have to calculate the NAV of the fund as on 1st February 2019. So let us concentrate on the first portion. Then we will come to the second portion also. Okay, now calculate the NAV for the 1st February 2019. Number 5, this first portion, NAV per unit. We know how it is calculated. It will be total assets minus total liabilities upon number of outstanding units. Number of outstanding units. So what are the total assets? The same way it will be calculated. That is company, number of shares, market price per share, Mind you, it is on 1st of Feb 2019. Okay, this is the price on 1st of February 2019. So market price per share and then the total investment value, or total you can say market value. So the figure is given in front of you. You have to simply write it. So first 20,000 into 20. So company name, I will first put the company name L, M, N, and P. So 20,000 shares, company L, market price per share 20. Okay, so M, it is 30,000 and market price per share 312.40. M, it is 20,000, market price 361.20. P, it is 60,000 multiplied by 505.10. So let us calculate this total value. First, 20,000 multiplied by 20 is coming to 4 lakh. Second, 30,000 multiplied by 312.4 is coming to 93 lakh 72,000. Now, in calculating case of M, 20,000 multiplied by 361.2 coming to 72 lakh 24,000. Well, now calculating case of P, 60,000 multiplied by 505.1. It is coming to 3030,600. So it would be 3 crore 3 lakh 6,000. Now let us calculate the value of the total assets. In this case, if you observe that no liabilities are given, so we can consider this figure as, if you see in the question, liabilities are not specifically given, so we will consider it as the total net asset value itself. So you can say total net assets, you can say. So we will add all these figures. So it is actually coming to 4730 4 crore 73 lakh 2,000. So this is the total assets is coming. Now calculate the net asset value per unit. Net asset value per unit. So it will be 4730 divided by the number of units. It is given in the question. Number of units. This is number of units is actually 6 lakh. It is given in the question. So it is coming to 78.84. 78.84 per unit. It's NAV. Okay. So up to this portion, it is relatively simple. A repeat of the first question, you can say. We multiplied the number of shares with the market price per share. We get the total market value. We will consider it as the total net assets. No liabilities are given in the question. So then we will multiply the total assets, net asset by the number of units, which is 6 lakh. And the amount arrived at is 78.84 per unit. It is the NAV per unit. Fine. So let us come to the second part of this question. Now read the second part very carefully. What the second part says. Following information is given. Assume one Mr. A submits a check of rupees 30,000. It submits a check of rupees 30,000 to the mutual fund, and the fund manager purchases 8,000 shares of M Limited. So now the shares of M Limited will not be 30,000. Now it will be 38,000. Now it will be 38,000 because further investment has been made into this. 8,000 shares of M Limited. Fund manager invested 8,000 shares into it. And out of 30 lakhs, but whichever portion remains by investing into the shares, balance amount is held in a bank. So now what will be the position of the fund? The question is asking, second part is asking what would be the position of the fund. The question is not asking about return or the NAV. It only asking about the position of the fund. Okay. Now let us calculate this aspect, the position of the fund. Now, same method, company, number of shares, market price per share, market value, and name of the company L M N P, and total number of shares. Total number of shares is already given in the question itself. That is 20,000, 30,000 in case of M, 20,000 in case of N, and 60,000 in case of P. Market price per share on now. In case of M, what will be the number of shares? It will not be 30,000, it will be 38,000 because further investment have been made. So in this case, it will be 38,000. The total number of shares in case of M Limited is 38,000. Market price per share same, 20, 312.40, 361.2, and 505.10. So let us calculate it. The first, it will be remain the same. The figures, it will be 4 lakh. And also this will remain 72 lakh 24,000, remain the same. And in case of P Limited, it will also remain the same. 30306. 3 crore 3 lakh 6,000. Okay. Now we have to calculate the M Limited because M Limited, the shares have increased from 30,000 to 38,000. So let us calculate 38,000 multiplied by 312.4 market price. It is coming to 1 crore 18 lakh 71,200. So, fine. Now calculate the total amount. Total net assets. is coming to hmm, is coming to 4 crore 98 lakh and it is 1,200. Fine. But there will be some cash also, at has been told in the question that out of 30 lakh, it has invested 8,000 shares of M Limited and the rest balance of the amount in a bank account. So you have to calculate this aspect also. So let us calculate in this cell because investment is 8,000 shares multiplied by invested in M company. It has invested in the shares of M company. So it will be 312.4. So 8,000 into 312.40. So it will be, let us calculate it, 8,000 into 312.4 is 24 lakh 99,200. But what is the total investment which is made? What is the total investment? Total investment is here 30 lakh. Mr. A submits a check of 30 lakh. So out of 30 lakh, rupees 24 lakh 99,000 has been invested in shares. So rest of the amount must be in cash. So what is the cash? 30 lakh minus this amount, 24 lakh 99,200. So it will be 5 lakh 800. So 5 lakh 800 is in cash. So 24 lakh out of 30 lakh total investment which Mr. A has made into the mutual fund is rupees 30 lakh. So out of 30 lakh, this 24 lakh 99,200 is in shares and 5 lakh and 800 is in cash. So we'll add cash. Four nine 498020 plus 5 lakh 800 is coming to 5030 is coming to 5 crore 3 lakh 2,000. So this is the net assets. So I will not write it within here. It is better to rub it here. So this is the net assets this is the position. Okay. Now we know that what is the number of investment in shares and what is the total number of investment in cash. Now, what about the total number of units? Because whatever we see that whatever amount has been invested, whatever new amount is invested, is actually converted into units and total unit is then invested. So existing units, what is the total number of units existing? It is existing unit is 6 lakh. Okay. And by way of this further investment 30 lakh, some units might have increased. So what will be that total number of units which have increased due to this investment of rupees 30 lakh? Let us see. So it will be rupees 30 lakh, rupees 30 lakh divided by the net asset value which we have calculated on 1st of February, that is 78 point, this amount 78.84. So divided by rupees 78.84 per unit. So let us calculate it. What this arrives at? is coming to 38,051.75. This is the total number of units. 38,000 38,051.75. Okay, you all are doing well now. So this is the total number of units. Okay, how this is arrived at, understood that total investment is made is 30 lakh. Out of this 30 lakh, 24 lakh 99,200 in shares of M Limited, and rest of the amount, that is 5 lakh 800, is in cash. So by investing this further 30 lakh, how much units will be there? So it must have been converted into units. So how much will be the total units? That 30 lakh divided by the this NAV of 1st of February, which is 78.84. So total units arrived at is 38,051. So total number of units will be is 6 lakh plus 38,000 and 081.75. So now total units will be 6 lakh plus rupees 30 lakhs divided by the NAV, that is 78.84 per unit. Okay. So it will be 6 lakh plus, we have calculated the amount, 38,051.75. 38,051.75. So it will be 6 lakh 38,051.75 units. Now the total unit. So this is actually the current position of the fund. Okay. This is the current position of the fund. So I hope this is second part is clear to you. So how we did it? First of all, whatever amount is invested is converted into units. So we take the per unit NAV of 1st of February. So further units was 38,051.75. Earlier it was 6 lakh. So 6 lakh plus 38,051.75. So now the total number of units are 6 lakh 38,051.75. So now let us calculate the third portion. So what is the third portion asking? It is asking the new NAV of the fund as on 2nd of February 2019. We have calculated the NAV on 1st of February. Now we have to calculate the NAV on the 2nd of February. Now let us calculate it. Same process. Company, number of shares, market price per share, market value. Company name given to LMNP. LMNP. And number of shares will be the same, 20,000. Now total number of shares are not 30,000, it is 38,000 because of the further investment made by A. 20,000, 60,000. Market price per share are different on 2nd of February. Let us see. It is 20.5 for L, 20.50. For M, it is 360. For N, it is 383.10. And for P, it is 503.90. So now let us calculate the market value. Mind you, this is on 2nd February 2019. Let us calculate it. 20,000 multiplied by 20.5. 4,10,000. 38,000 multiplied by 360. 1368. 1 crore 36 lakh 80,000. 1 crore 36 lakh 80,000. This figure. Now 20,000 multiplied by 383.1. 20,000 multiplied by 383.1 is coming to 76 lakh 62,000. 76 lakh 62,000. And then last portion P, 60,000 multiplied by 503.9 coming to 3023.00. So it is coming to 3 crore 2 lakh 34,000. So let us calculate this value. Let's add all these figures. It is coming to 5198,600 plus but again you have to add the cash because cash balance was there 5 lakh 800 because of the further investment. So cash will be added. Add cash. So it is actually 5 lakh 800. Now we have calculated it. So let's calculate it. So it is 5248,6800. 5248 6800. So it is actually coming to 5 crore 24 lakh 86,800. That is the net assets. Net assets. But what the question is asking? Question is asking of the net asset value. Net asset value as on 2nd February 2019. So net asset value per unit will also be calculated by this NAV per unit is equal to this portion 5248,6800 divided by, now the total number of unit is not 6 lakh. The total number of unit is, we have calculated, it is 6,38,051.75. Because of the further investment, the units have increased. So it will be 638,051.75. So total NAV is this is, and this is the total number of units. So let us calculate it. So it is coming to 82.26. 82.26 per unit. So this is the NAV as on 2nd of February 2019. No, actually, we will not be, we will not be divided this portion cash you are asking, na, that is 5 lakh 800 upon the net asset value. This portion, this 30 lakh, see, this 30 lakh, what is this 30 lakh? 30 lakh is the amount of investment which A has made into the mutual fund. So mutual fund invested this amount, entire 30 out of certain portion into the M Limited, and it has purchased 8,000 shares. So what will be the investment, mutual fund investment in shares? It is actually, we have calculated it. It is 24 lakh, this amount. This 24 lakh 99,200 is in shares. And rest of the amount, that is total investment amount is 30 lakh. So by 30 lakh, if 24 lakh 99,200 is deducted, the leftover amount is 5 lakh 800. So this amount is the cash. So total amount is actually is 30 lakh. Total amount is 30 lakh. This is given in the question that 30 lakh investment has taken place. So out of this 30 lakh, 24 lakh is it is in shares, and this 5 lakh 800 it is in cash. So these entire 30 lakh has to be converted into units. So total units are then reinvested. So in order to calculate the total unit, it is has to be divided by the NAV in order to calculate the number of unit. That is why it has been divided by the NAV as on 1st of February, because we, before proceeding to 2nd February, at the end of the day on 1st of February, we want to know the position. So what will the position at the end of the day on 1st of February 2019? So that will be the total number of initial means additional investment which we have made. That is 30 lakh divided by the NAV, which we have calculated on this 1st of February, which is 78.84. So additional units we have arrived at 38,051.75. So this 38,005.75 earlier, what were the units? 6 lakh units were earlier there. Okay. Now the total number of units are earlier 6 lakh, now 38,051.75. It will be 6 lakh 38,051.75. I hope it is now clear to you. Yes, cash will be added at the end of the this. Besides, because cash also comes under cash, so assets, so it will also be added. Actually, we are assuming that 8,000 different scenarios given. We are assuming that this 8,000 has been invested on 1st of February 2000. If 8,000 additional investment were made on 1st of February 2019, then what would be the position? That is why the, you can say, net figures, this market price of 1st February is taken. So this is the, in second part, that is a different scenario. If 8,000 shares, if 30 lakh has been invested in purchasing the 8,000 shares of M Limited on 1st of February 2019, what would have been the position? Fine. So answer is coming to, most of the people have now arrived at the answer. Closing price of, no, actually, the closing price of 1st and February and 2nd of February mentioned is different. 1st of February, there is market prices given to you. 1st February, 2nd February, the closing prices are uh, different. Okay. So any other question in which you need clarification? So, shall we proceed to the next question? Fine. This question number six, before this is the question I will be taking before the break. After that, we will be taking a brief break. So let us understand this question number six. It is basically simple. You have to calculate the net asset value in this case, and we have to just understand the what is the figure is trying to tell. So let us consider this question. Actually, Kirti, this is 38,051 is the total number of units which have arrived by investing. Because what the mutual fund is doing, that mutual fund is investing the entire amount. It has collected the check from A and it is invested the amount into the whatever company he thinks feasible. He thinks that yes, the investment in Mr. Investing in the shares of M Limited, investing in the shares of M Limited will be fruitful. So he mutual fund manager invested in the shares of M Limited, and whatever amount is there, actually, it was cash. So uh, this 38,051, the units which have arrived at, is the total additional amount which has been invested. That is total number of additional investment converted into units. So it is not the, you can say mutual fund will not calculate it. This comes from A or this is the comes from whatever investor. So that is the beauty of the mutual fund. Collected the amount from various investors, pooled it, and then invested into various investment opportunities. So that is why this 38,051 added to the total number of units, and this total units will be considered 6,38,051.75. Mutual fund will not say that this 38,051 only belongs to A. It will consider 6,38,051 as the total units which have to be reinvested. Okay, now come to the Now, come to the next question. Question number six. Listed shares at cost is given, cash in hand is given, bonds not listed and quoted is given, other fixed securities are also given, dividend accrued, amount payable on shares, expenditure accrued is given, number of units is also given, current realizable value, the listed shares purchased, and the present index. So I try to explain in this the question itself so that you are able to understand this. Listed shares at cost is 20 rupees. But if you see that while calculating the NAV, here it is given that present index is 2003. And the listed shares were purchased when the index was 1000. So when the shares were purchased, it is 1000 and now it is 2300. So this 20 will be adjusted according to the present index value. That is 20 multiplied by 2300 upon 1000. So it will be 20 into 2300 upon 1000. So it will be 46. So now the value will be 46. Cash in hand as it is 1.23 will be taken. So first of all, I will be calculating the assets. So of the mutual fund, listed shares, we have calculated 46. How 46 is arrived at? 20 rupees is the 20 crores investment has been made and index was 1000 when 20 crores were purchased. Now the present index is 2300. So we calculated 20 with the proportion of 2300, which is 46. So 46 crores. Now the value of listed shares, cash in hand 1.23, debentures, bonds and debentures and cost 4.3, out of which not listed and quoted 1. But here in the question, it is given that there has been a diminution of 20% in unlisted bonds and debentures. So now the value is 1, which is unlisted, and 20% diminution means if 20 means 80%, 1 into 80%, that is 0.8. So in this case, 0.8 will be taken, 0.80. Again, fixed income securities at cost is given, but in the question, let us see what Realizable value of fixed income securities is given, but at the end it is also given that fixed income securities are at cost. So we will take this figure at cost only while calculating the NAV. So fixed income securities 4.5 will be written as it is. Now, dividend accrued, also asset dividend accrued 0.80 on the 5 of the mutual fund, the dividend accrued from the companies. So it will be taken as an asset. 0.8. Amount payable on share, this is a payable on share. So it will be a liability. Expenditure accrued, it will also be a liability. I think we have covered all this. Let's wait. We have covered all this. Let us now solve it. I hope now you are able to understand how net asset value will be calculated in this. So let us calculate it. So this is basically question number 6. It's question number 6. So equity shares 46 we have already written. This 46 we have calculated how it is arrived at, and then cash in hand 1.23, and then uh, bonds and debentures, bonds and debentures not listed 0.8. Okay, and bonds and debentures listed is 8. Dividend accrued dividends accrued, it is 0.8. And fixed income securities, income securities 4.5. Let us add all these figures. Okay, Kirti, I will clear it. The index funds, listed shares. Okay, I will clear it. Don't worry. Just let us solve this question first. 6 plus 1.23 plus 0.8. So it is coming to 61.33. 61.33 is the total assets. And now we will deduct the liabilities. Less liabilities. So liabilities, it will be amount payable on shares. Let's see what are the liabilities. Amount payable on shares 6.32. Amount payable on shares 6.32. And second liability was 6.32, and second liability expenditure accrued 0.75. So 61.33 33 minus 6.32 minus 0.75. 54.26. It is actually coming to 54.26. So these are actually in crores, rupees in crores. 54.26. It is coming the net asset value. It is net asset value. Fine. Net asset value. Now NAV per unit is equal to this 54.26 crore divided by the number of units, which is 20 lakhs. So let us calculate it. Number of units, it is given in the question. C, the number of units. Number of units, it is given in the question 20 lakh. So we divide the net asset value, total net asset value, which is 54.26 by 20 lakh. So let us calculate this. It is coming to 27, 54.26, 54 crore. Okay, 271.30. It's coming to 271.30, which is the NAV per unit. Okay. So how we have proceeded? We actually taken the current figures. So listed shares 46 we have taken. We converted this amount of 20 into the proportion of the listed shares. Then we taken all the latest figures, cash in hand, bonds and debenture not listed, which was given as 1, but since the diminution in value it given, that is 20% diminution. So 0.8 has been taken at debenture not listed. Fixed income securities 4.5 is taken because it is given in the question that fixed income securities are at cost. Therefore, 4.5 is taken on, not this value is taken. Okay. And then the bonds and debentures listed is taken as it is. And fixed income securities 4.5 taken, and dividend accrued is also given in the question. Okay. So in bonds and debenture listed is also given this portion. This has also been taken. And liability it is given that amount payable on share 6.32 and expenditure accrued 0.75. So we deducted the total assets. We added all the assets, which is coming to 61.33. We deducted the liabilities, amount payable on shares and expenditure accrued, and we get the final amount. Net asset value is 54.26 crores. We divide this 54.26 by the number of units, 20 lakh, which is given in the question. So anyway, arrived at is 271.30. Tanisha, it is coming to 271.30. It's coming to 271.30. Kindly calculate it again. Fine. So I will taking a brief break of about 10 minutes or so. So let us come back at the break, after the break. And if you have any question, please jot it down and we can discuss after the break also. So let us take a brief 10 minutes break. Thank you. Ashokji. So welcome back to this session on mutual funds. One Kirti was asking actually the concept of index funds. So index fund, what happens is that, as I've just discussed, so index fund is basically a passive fund. Why passive fund? Passive fund because the mutual fund managers remains passive, or they just invest the shares in those companies in which a benchmark is invested or index has invested. Index can be anything. Index can be Index can be Nifty. Okay. Nifty 50. Index can be Sensex. Index can be Nifty 100. So on and so forth. Nifty Pharma, Nifty, you can say metal. So it can be anything. So it's simply invested into the benchmark. For example, index fund has came that ABC Nifty 50 index fund. So it means the mutual fund manager will invest in those companies in which is already there in the Nifty 50. So the mutual fund manager in the index fund do not have to do much research and development expenses. So that is why the expenses are less in case of index fund, because the mutual fund and mutual fund managers simply have to invest the amount into those companies which are there in the index, Nifty 50 in this example. That is why it is called passive fund, because the mutual fund managers remain passive in this situation. And that is why the expenses in case of index mutual funds are less. Okay. So now we go on to the next question. Now come to question number 7. Let us read the question number 7, try to understand, and then we will solve it. In this case, there are three schemes: scheme X, scheme Y, scheme Z. Date of investment is given, amount of investment is also given, opening NAV is given, dividend received, and closing NAV is also given in this case. And you have to calculate the effective yield on a per annum basis. Now, before going to effective yield, what is yield? Yield is actually the return which the investor will be getting. So, what will be the return which the investor will be getting? First of all, it will be the closing NAV minus opening NAV, as we have seen in our earlier questions, and the dividend also. So it will be the difference between closing and opening NAV and dividend. This will be the total yield. So now what will be the effective yield? So effective yield will be effective yield is equal to total yield divided by initial investment, or you can say opening NAV, multiplied by 100 into 365 divided by number of days investment is held. Number of days investment held. So this is the basic formula of the effective yield. We know what yield is, and effective yield is calculated by this: total yield upon opening NAV into 100 into 365 upon number of days in which investment is held. So this is basically a percentage of, you can say, the total yield for the number of days in for which investment is held. Now let us get back to the question and calculate the yield first, and then we will come to the calculation of effective yield. Answer to question number 7. So this is the calculation of effective yield. There are three mutual fund schemes, that is scheme X, scheme Y, and scheme Z. Okay. Date of investment. Date of investment is already given in the question. Date of investment. This is the date of investment. So this is write it. In case of X, in case of Y, and in case of Z. Z it is 1/3/2019. Okay. Now the amount of investment. Let us write down the amount of investment. It is also given in the question, amount of investment. See. So 5 lakh, 1 lakh, 50,000. NAV per unit. Opening. Opening NAV per unit. It is also given in the question. Net asset value at entry date. This is also given. Opening NAV. Let's write it. 10.50, 10, and 10. Now, can we calculate the number of units? Can we calculate the number of units of mutual fund? Yes, because the amount of investment is given, NAV per unit is given. So from this, we can calculate the number of units by dividing the amount of investment by the NAV per unit. So let us divide it in case of X, 5 lakh by 10.5. So this is coming to 47,619.05. In the same way, it will be calculated in case of Y. 1 lakh divided by 10, it will come to 10,000. And 50,000 divided by 10, it will come to 5,000. Number of units have been calculated. Now, calculate the closing NAV per unit. It is also given in the question, closing NAV per unit. This is the closing NAV. Ten point 4, 10.10, and 9.80. Okay. Now, can we calculate the total closing NAV from the figures which we already have? The answer is yes. Because we got the number of units, we will multiply it by the closing NAV per unit, then we will get the total closing NAV. So we with this multiply this figure 47,619.05 by the 10.40. So it will come to 495,238.12. So total closing NAV is 4,95,230, 238.12. In the same way, total closing NAV of Y and Z will be calculated. Multiply the total number of units by the closing NAV per unit. So it will be 1,01,000 in the case of Y, and Z it will be 49,000. Now come to the return. That is closing minus opening. That is closing NAV minus opening NAV. So closing NAV in case of X, we have calculated this figure, closing NAV, and this is the amount of investment, which is the opening NAV. So we minus this, we will get opening 5 lakh minus closing 495,338. 4761.88. So 4761.88. So this figure will be negative because if you observe that the closing NAV, this figure is lesser than the opening NAV. Therefore, this figure 4761.88 is in negative. Fine. So first of all, we will calculate in the case of X itself. Let us calculate for X first. Then, in order to calculate the yield, we have to add the dividend with the return. Return plus dividend, it will be the total yield. So what is the dividend? 9,500 in all these cases. 9,500, 1,500 in case of Y. It is Z, it is nil. So total yield in case of X, so total yield in case of X, it will be 4761.88. This is a negative figure and this is a positive figure. So let us calculate the total yield. So total yield is actually coming to 4738.12. Okay. Now calculate it for Z and Y in the same way. That is, let us calculate the return of Y first. So how the opening minus closing? 1 lakh. This figure opening and 1,01,000. That is closing in case of Y. Closing is higher, so this figure will be actually positive. So return plus dividend, it will be total yield, which is 2,500 in case of Y. Same way, calculate it for Z. Opening minus closing, it will be 1,000, but it will be a negative figure since this closing NAV is less than the opening NAV. There is no dividend in case of Z, so this figure will be negative figure. That is 1,000 will be a negative figure. Now, what is the number of days? Number of days, let us calculate it. The number of days in case of, because we have to now calculate the effective yield. Effective yield is total yield upon NAV into 365 upon number of days investment held. So this is an important figure. This number of days up to which the investment is held in scheme X, scheme Y, and scheme Z. So let us calculate it. Date of investment, it is given 1/12/2018. And you have to calculate the yield up to 31/3/2019. So what is the number of days till 1/12/2018 to 31/3/2019? Total number of days. Because investment was made on 1st of December 2018 and the units were held, the scheme is, units were held by Mr. Sinha in scheme X up to 31st of March. So you have to calculate the total effective yield of Mr. Sinha. Okay. For December, it is 31 days. For January, 31 days. For February, 28 days. And plus March, it is also 31 days. So let us calculate it. How many total days? So it is actually coming to 121 days. So 121 days is the number of days in which investment is held by Mr. Sinha in the scheme X. In the same way, it is calculated for the scheme Y and scheme Z also. Scheme Y, how many days it will be? 1/1/2019 means January 31 days, February 28 days, January 31 days, February 28 days plus March 31 days. So it will be 90 days in case of scheme Y. So he held the investment in scheme Y for 90 days. And in case of scheme Z, the number of days, investment was made in 1st of March and it is held is 31st March, means investment is held for 31 days in case of scheme Z. Okay. Now put the figures. number of days investment held. For X, we calculated 121 days. In case of Y, it is 90 days. In case of Z, it is 31 days. Now calculate the effective yield. The effective yield by the same formula, total yield upon opening NAV into 100 into 365 upon number of days investment held, because it is the total yield which has been calculated for the whole year. So we have to calculate it by we have to calculate the effective yield per annum. It was calculated for a certain number of days. So what is asking in the question? It is asking the question that effective yield, this is important, effective yield on a per annum basis. Effective yield on a per annum basis. So invest in case of Y, in case of X, the investment has been held for 121 days, but we have to calculate it for 365 days. That is this is formula 365 divided by the number of days investment is held. Now let us calculate it. In case of X, so total yield is 4738.12 divided by the investment value, that is the opening NAV, that is 5 lakh into 100, and then 365, because we are calculating yield on a per annum basis for 1 year. Number of days investment held in case of X, that is 121 days. So let us calculate it. In case of scheme Y, 4738.12 divided by 5 lakh into 100, 365 divided by 51. So it is coming to 2.86. 2.86 in case of scheme X. In the same way, calculate it for scheme Y and Z also. Scheme Y, the total yield 2,500, investment 1 lakh into 100 into 365 divided by number of days investment held in Y is 90 days here. So 365 upon 90 will come to about 10.14 in case of scheme Y. The same way it is calculated as in case of X. Now Z total yield is in the negative figure. It is minus 1000. This figure, total yield in case of scheme Z. So minus 1000 divided by initial investment is, in case of scheme Z, is 50,000. This figure. Into 100 into 365 divided by number of days investment held, it is 31 in case of Z. So let us calculate it. It will be coming in the negative figure itself, this effective yield minus 23.55. So this is how the effective yield is calculated. So how we have proceeded? We first of all calculated, these figures are already given up to this. So we calculated the total number of units by multiplying this opening amount of investment into opening NAV. Total number of units we got, then closing unit NAV per unit, it is also given in the question. We multiply the number of units with the closing NAV. We got this figure, total closing NAV. So now we can get the return, that is closing NAV minus opening NAV. So closing NAV, this figure is, we have calculated 4,95,238.12 in case of X. And the opening amount, the initial investment, which is 5 lakh. So actually there was a return is in the negative because closing NAV is less than the opening NAV. So in the negative is come to 4761.88, this figure. And then dividend, it is given in the question, dividend is 9,500. So the total yield is, we got is 4738.12 in case of scheme X. Total number of days we have calculated, the investment which has been held. It has calculated by this. Scheme X date of investment by Mr. Sinha is 1st of December 2018. And it has held till 31st of March 2019. So we have calculated here 31 days in case of January, 31 days in case of 31 days in case of December, 31 days January, 28 days February, and this 31 days in case of March. So total 121 days in the month of March. Total 121 days it held the investment. So it is calculated by this effective yield. This is the total yield. This is the amount of investment. This is 365 upon 121. This is the number of days investment held. So we got the effective yield in case of scheme X 2.86. In the same way, we got the effective yield in case of scheme Y, which is 10.14, and scheme Z, that is 23.55. So any question on this till now? Fine, Satish, Kirti, Tanisha, all you are getting the correct answers. Okay, fine. It means if negative effective yield means return is on the negative side. Okay. So not generating any return by investing in this scheme Y. It is generating a negative return. Okay. Now come to question number 8. Now let us first understand this question. Question number 8. It is similar to, if you can observe, this question number 8 is similar to question number 7. But there is one difference, a small difference. Let us see what it is. Here, question number 8, amount of investment is given, and opening NAV. This is the opening NAV is also given. Dividend received is given. NAV, closing NAV is also given. So the same way, closing NAV minus opening NAV, this will be the return. And then this dividend will be added back to get the total yield. Okay. And one difference is that in the previous question, number of days investment held was given. But in this question, effective yield is given. You can observe this effective yield is not required to be calculated. We have to calculate the number of days investment held in this portion. So there is only one change, that is, instead of earlier question, the number of days investment held was given. We are required to calculate total effective yield. But in this question, total effective yield is given, but you have to calculate the number of days for investment held. So this is one a small change. Otherwise, the question is same. So let us calculate step by step. First of all, you have to calculate number of units, total NAV, total yield, and then lastly, we will come to number of days investment held. So let us proceed to solve this question. So three schemes, X, Y, and Z. Amount of investment. It is given in the question. Amount of investment, this figure, 2 lakh in case of X, 4 lakh in case of Y, and the 2 lakh in case of Z. Now opening NAV per unit. It is given in the question, opening NAV, this portion, this portion. So it will be 10.30, 10.1 in case of Y, and 10 is in case of Z. And number of units from this, can we calculate the number of units? The answer is yes. We divide the total amount of investment by the opening NAV per unit, we will get the total number of units. So divide 2 lakh upon 10.3, we will be getting 19,417.48. In the same way, it will be calculated for Y and Z also. 39,603.96. It will be in case of Y, and Z, it will be 2 lakh upon 10, that is 20,000. Number of units. The first portion, we have arrived at number of units. We see that in the question, it has been asked the number of units in each scheme. So we have calculated this portion. Now, come to closing NAV per unit. Closing NAV per unit, it is given in the question itself. See, this closing NAV, this portion, it is given in the question. 10.25, 10, 10.20. So can we calculate the total closing NAV? Answer is yes. Total closing NAV. So number of units, we will multiply the number of units with the closing NAV per unit. That is 19,417.48 multiplied by 10.25 to get the total closing NAV. Let us calculate it. 19,417.48 multiplied by 10.25. It is coming to 199,029.17. In the same way, total closing value will be calculated in case of X, in case of Z and Y also. So in case of Y, it will be 39,603 point, wait for a second. In case of Y, it will be 39,6039.60. And in case of Z, it will be 2,04,000. Total closing NAV. So second part of the question we have arrived at. See, total NAV it was asking us. So second part of this question is arrived at. First part we have already calculated. Second part of the question is arrived at, total NAV. Now come to the third part. This is a total yield. The total closing NAV we got. Now we will calculate the return. That is closing minus opening. Closing minus opening. So it will be this closing NAV 1,99,029, and opening NAV is the amount of investment 2 lakh. Again, the return will be negative because closing NAV is less than the opening. So let us calculate it. It is coming to 970.83 return. 970.83. Now we will add the dividend. We will add dividend received. So dividend received, it is given in the question itself. See, dividend received, it is given. So let us add this dividend. 6,000 in case of X, nil 0 in case of Y, and 5,000 in case of Z. 5,000 in case of Z. So by adding this, that is the return, closing minus opening plus dividend, we will get the total yield. So let us calculate it. 6,000 minus 70.83. That is 5029.17 in case of X. 5029.17. The same way, calculate it for Y and Z also. It will be coming to 3960.4 negative figure in case of Y, and in case of Z it is coming to total yield return. Okay, so Y, the return will be minus 3960.4. Case of it will be 4,000 in case of Z, the return. So total yield will be return plus dividend. So it is minus 5029.17 in case of X. In case of Y, it is minus 3960. This will not be negative because dividend is in positive figure. And in case of Z, the total yield is 5 plus 4, that is 9,000. Total yield is 9,000. Fine. Now we got the third aspect of the question, that is the total yield. Asking that in the third aspect of the question, it is asking for the total yield. So we got the first three parts: number of units in each scheme, total NAV, and the total yield. Now, last aspect, we have to calculate the number of days investment held. Now, number of days investment held have to be calculated. Number of days is not given, and effective yield per annum is given. Effective yield per annum is given, that is 9.66 in case of X, that is given in the question. Effective yield C. Effective yield is given in the question. So 9.6 is in case of X, minus 11.66 in case of Y, and 24.15 in case of Z. Effective yield 24.15 in case of Z. Now we will calculate number of days investment held. What a question is asking about? The number of days investment held. So we will calculate by the same formula. Effective yield is equal to total yield divided by the initial investment into 100 into 365 upon number of days investment held. Okay, so what is the effective yield? It is 9.66. Total yield given, we have calculated 5.29.17. Initial investment, we are calculating in this case, in case of X. So 5029.17 divided by 2 lakh, which is the initial investment, into 100 into 365 upon number of days investment held. Let us say, assume number of days investment held, we can denote it as N. You can denote it as N. So let us calculate it, this aspect. So it is coming to option 1,835,64705 divided by cross multiplication, that is 2 lakh multiplied by 9.66 is coming to 19,32,000. And okay, this will come here 19,32,000 and so n will be 1,835,64705 divided by 19,32,000. So 19,32,000 is basically arrived by 2 lakh multiplied by this cross multiplication. 2 lakh multiplied by the 9.66. Now let us calculate it. It's coming to about 95 days. The N 95 days. So number of days investment held in case of X, mutual fund X, is actually 95 days. So it was calculated in the same way as in the earlier question. The difference was that only the number of days investment held has to be calculated and effective yield is given in the question. In the same way, it will be calculated for Y and Z also. Will be calculated in the same way in case of Y and Z also. So effective yield in case of Y 11.66. Total yield is given. We have calculated upon initial investment 4 lakh into 100 multiplied by 365 divided by number of days, that is n. So we will calculate the n by the same method. It will come to 31 days. So if you have cleared the first portion, it can be easily arrived at in case of Y. In the same way, it can be calculated in case of Z also. That is 24.15 is the given. See, 24.15, this portion was given in the question itself. So effective yield is equal to total yield. Total yield we have calculated in case of mutual fund Z, which is 9,000. 9,000, that is the total yield. 9,000 in case of Z divided by initial investment. Initial investment 2 lakh. Okay, so 9,000 upon 2 lakh into 100 into 365 upon number of days. So n will be calculated by the same method. It will come to about 68 days in case of Z. Number of days 95, 31, 91, 95, 31, 68 days. Yes, very good, Satish. Your answer is correct. Everyone. So X number of days 30.99, 31 days, and Z number of days. No, you take the entire figure, okay, Mansha. So this is you please tally it. 95 days in case of X, 31 days in case of Y, and 68 days in case of Z. Okay, 95 days in case of X, 31 days in case of Y, and 68 days in case of Z. So most of you are getting the correct answer. Yes, good. So now we will proceed to the next question, which is question number 9. Just read the question and try to just make out how this will be solved. Okay. Now read the question number 9. What the question number 9 is saying? Question number 9 is saying that ABC mutual fund issued 20 lakh units. Okay. And per unit cost is 10 per unit. 200 lakh units issued, per unit cost 10 lakh. Fine. There are certain initial expenses also, which is 12 lakh. And what the total amount is it raised is 20 lakh units into rupees 10, which comes to rupees 200 lakh. Okay. Now 200 lakh is total 200 lakh is invested. Out of that, 12 lakh are initial expenses, and it has also invested the amount in building a portfolio, which is 1 lakh 85,000. So there will be certain cash because out of 200 lakh which it raised, there were 12 lakh initial expenses and 185 lakh it invested out of what the total amount remained from 2 lakh, 200 lakh it raised. Now, whatever amount it has, it then there was an investment costing 60 lakh, it sold it for 63 lakh. And then it purchased another securities during the month of April itself for 56 lakh. Fund management expenses rupees 8 lakh, out of which 10% was in arrears. So it will be a liability, 10% arrears. And in the month of April, dividend earned by the mutual fund is 2 lakh. But out of this 2 lakh, it distributed 80% of the realized earning. Student, this portion is all important. 80% of the realized earnings means 80% of not only 2 lakh, but also the this 3 lakh capital gain, because instrument were costing 63 lakh, 60 lakh, which has been sold for 63 lakh. So 3 lakh is the capital gain. So 80% of 3 lakh was also distributed. So not only the 20% of dividend, 80% of dividend is distributed, 80% of the capital gain, which is 3 lakh, is also distributed. And in the end of the month of April, that is on 31st of April 2012, the market value of the portfolio was 198 lakh. This was the total market value. And what you have to calculate, you have to calculate the annual rate of earning. So how the annual rate of earnings is calculated? The return is calculated. We have done the problem before. That is closing NAV minus opening NAV plus dividend plus capital gain, right? Now in this question, what is missing? Missing is the closing NAV. Closing NAV is not given. It is only given that the market value of the portfolio was 1 lakh, 198 lakh at the end of the month of April. Okay. So we have to calculate the closing NAV. Before closing NAV, there will be some portion of cash. So what is that? So this calculation of cash is important. So first of all, we will calculate the cash from whatever figure is given in the question. And then we will add the amount of cash with the market value of portfolio to arrive at the closing NAV. Once we get the closing NAV, then we can get the return also, because by deducting the closing NAV from the opening NAV, we will add dividend and capital gain divided by the opening NAV to get the return, as we did in the earlier questions also. Okay. Just wait a second, Tanisha. Let me go back to the question. Uh, one, two, lakh. No, Tanisha, actually this return is 4,000. Total yield, we have to divide the total yield. So total yield is actually coming to 9,000, no? 4,000 here. See, this 4,000 return and this 5,000 dividend received. So total yield is 9,000. So we have to divide this 9,000 by the initial investment to arrive at the number of days investment held. Okay. Okay, now let us solve this question. I have summarized this, how to go about this question. So first of all, let us calculate the cash. Then we will add cash with the market value to arrive at the closing NAV. Once we get the closing NAV, then we can easily calculate the return. Now this is the question number 9. This is rupees in lakhs. Okay. Now, amount raised by ABC Mutual Fund. Amount raised by mutual fund is 200 lakh. Okay. It is given in the question. We have calculated 20 lakh units and 10 per unit. That is 200 lakh has been raised by ABC Mutual Fund. So 200 lakh raised by ABC Mutual Fund. Okay. Then we will deduct the initial expenses. We will deduct the initial expenses, which is there in the question itself. Initial expenses 12 lakh. So it will be 188 lakh. Out of this 188 lakh, 185 lakh has been invested. It is also given in the question that 185 lakh were invested. This 185 lakh. This has been invested. So now what remains is 3 lakh. So 3 lakh will be the cash balance. 3 lakh will be the. But out of that, certain other transactions were also done during the month of April. First of all, 63 lakh has been raised by selling it. So it will be added. Instruments sold. Okay, so this 3 lakh will be added. This 63 lakh will be added. And then again, out of this 63 lakh, this instrument of 56 lakhs were purchased. So this 56 lakh instrument purchased. Fine. Then again, there were certain expenses which were taken place. Expenses are 8 lakh, out of which 10% was in area. So 7.25 lakh, 7.2 lakh, which will be deducted. Expenses. 7.2. Then dividend paid. Dividend paid is, first of all, this is, I will get as dividend received. Dividend received is 8 lakh. Dividend received is 8 lakh. And dividend paid out of this 8 lakh, what is given in the question, out of this 8 lakh, 80% has been distributed. This 80% is distributed. So this will be 1.6, and also capital gain has also been distributed, or you can say paid. So capital gain was 3 lakh. How 3 lakh? 63 lakh minus 60 lakh, because instrument were costing 60 lakh. It has been sold for 60 lakh. It has been sold for 63 lakh. So 3 lakh was the capital gain. So 3 lakh capital gain, and this 80% has been realized. So out of this, 80% has been distributed. So 80% of 3 lakh, it will come to 2.4 lakh. So let us calculate this. All the figures. 3 plus 53 minus 56 minus 7.2 minus 1.6 plus 8 minus 2.4, coming to initial investment, initial expenses 12 lakh, investment made. And what has been added? Added instruments sold 63 lakh added, and dividend received. Dividend received, that is, dividend received is 2 lakh actually. Dividend received 2 lakh. It is given in the question itself. Dividend received, that is 2 lakh. Okay. And then securities purchased, it is 56 lakh. Okay. Initial expenses 7.2. It is given in the question. Dividend paid 1.6, and this capital gain 2.4. Let us calculate this. Six minus 7.2 minus 1.6. That's 2 minus 2.4. So 0.8. So 0.8, it is the now the closing balance of cash. Closing balance of, it is the closing balance of cash. So total balance at the cash balance was 3. And after some sale and purchases during the month of April, the closing balance of cash now comes to 0.8. From that, what will be added? The market value of portfolio. It is given the market value of portfolio. This is 198 lakh. It will be added at the end of the month of April. So it will be market value of portfolio. It will be added. So market value of portfolio, it is 198. So total amount will come to 198.8. So this is the total assets, 198.8. Now from this total assets, certain liabilities have to be deducted. What are those? There is one liability in the question, which is mentioned, that this portion, that fund management expenses were 8 lakh, out of which 10% are in areas. This 10% are in areas. So 10% of 8 lakh, it is 80,000, it will be 0.8. It will be 0.8. So we'll deduct the total assets 198.8 minus liabilities 0.8. It will come to 198. So it is actually the net asset value. Fine. Okay, so from this net asset value, we have arrived at the net asset value, but now we have to calculate the return. Okay. So net asset value per unit is NAV per unit. It will be 198 divided by the number of units. Number of units is given in the question. That is 20 lakh. So 198 divided by 20, it will be come to about 9.9 per unit. So now when we calculate the return, here in this case, dividend and capital gain. So total return will be here if you see that the dividend paid is 1.6. It is actually return on the part of the investor. So 1.6 dividend and this capital gain 2.5 is also income on the part of the investor. So 1.6 and 2.4, 1.6 plus 2.4, that is 4 rupees is the return, 4 per unit. So actually 1.6 lakh. So 4 per unit is the return. You can say 4 lakh is the return, and return per unit, it will be, we will divide this 4 lakh, amount of 4 lakh by the number of units, which is by the rupees, number of units, which is 20 lakhs. This is 4 lakh is the total dividend and capital gain. 1.1 lakh 60,000, that is dividend, and 2 lakh 40,000 capital gain. So we'll add both these, we will get this 4 lakh as return. So we'll calculate the return per unit, that is dividend and capital gain, which will be 4 lakh divided by the number of units, 20 lakh. So we get it as 0.2 per unit. So now we will calculate the return, which is closing minus opening NAV, which we have arrived at opening minus closing NAV, 10 minus 9.9 plus dividend and capital gain is 0.20 divided by opening NAV into 100. Okay, so this 10 is the opening NAV, it is given in the question, 10 rupees, and closing NAV 9.9 we have arrived at, okay, plus return we have arrived at this return per unit 0.2 divided by the opening NAV into 100. This is the return. And let us calculate this, minus 9.9, 0.2. So this is actually coming to 1%. So basically, what is this? What is asked in the question? Annual rate of earning, and this is the monthly rate of earning. Okay, for 1 month. So yearly return will be this monthly return multiplied by 12, which will be 12%. So this will be the annual return, 12%. Okay. So how we have proceeded with this question? We first of all see that annual rate of return has to be calculated. But in this case, in this question, the closing NAV was not given. So in order to calculate the closing NAV, we calculated the closing balance of cash by the various transactions which took place during the month of April. So once we get the closing cash balance, this amount, we add with the market value of portfolio, which is given in the question, we get the total assets. Total liability is also given because out of the total fund expenses, 20% was in arrears. So we deduct the liabilities, we get the net asset value. This is the 198 is the total net asset value. We deduct this total net asset value by the number of units, which is 20 lakh given in the question. We got 9.9 per unit, which is the closing NAV. So what will be the return? Return will be the opening minus closing. Opening NAV 10, which is given in the question, 9.9 per unit, which we have just calculated, and return will be calculated by adding this closing minus opening plus dividend plus capital gain. So total dividend and capital gain is coming to rupees 4 lakh. That is 1 lakh 60,000 dividend and 2 lakh 40,000 capital gain here. This is 1 lakh 60,000 dividend and this 2 lakh 40,000, this is capital gain. So total 4 lakh is the dividend and capital gain. We deduct this total 4 lakh by the number of units, which is 20 lakh, and per unit, that is dividend and capital gain, which is coming, return is coming is 0.2 per unit. So we have put the figures into the formula, closing minus opening NAV plus 0.20, which is dividend and capital gain per unit multiplied by 100 upon opening NAV, which is 10. So monthly return is coming to 1%. In this question, we have to calculate the yearly return. So this monthly return 1% is multiplied by 12. We got the yearly return, which is 12%. Kirti, this 1.6 dividend is arrived at by this. Actually, see, if you see in the question, it is dividend is 2 lakh. This portion, dividend is 2 lakh. Out of this dividend, fund has received, the mutual fund has received rupees 2 lakh from the company as dividend. Out of this 2 lakh, it distributed 80%. So 80% of 2 lakh, it is actually 1 lakh 60,000. So by this 1.6 has been arrived at. Received dividend should be plus here, 1.6 dividend and 2.4, 2 lakh 40,000 capital gain also, because it disposed of some instrument here. 60 lakh instrument were costing, and it distributed it for, sold it for 63 lakh. So this 3 lakh was the capital gain, and 80% of this 3 lakh is coming to 2 lakh 40,000. So this 2 lakh 40,000 and this capital gain plus this dividend 1 lakh 60,000 is added to arrive at rupees 4 lakh as the total return. By this, the total 4 lakh is arrived at here. This 4 lakh. Okay. Return is 2.01. Return is coming to 1%. Mansha, please check. This yearly return is coming to 12%. Okay. Now we will come to the next question. Question number 10. Let us first understand this question, and then we will come forward. In this case, the mutual fund introduces, introduces two schemes, dividend plan and the bonus plan. And the face value of the unit is rupees 10. Mr. K invested 2 lakh in plan D and plan B each. Plan D is dividend plan and plan B is the bonus plan. And NAV in case of plan D is 38.2 and 35.6 in case of plan B. Particulars of dividend and bonus are given here. See, now what you have to do, you have to calculate the effective yield per annum. So how effective yield is calculated? We did before in our this assignment portion. Effective yield is total yield divided by the initial investment into 100 into 365 upon number of days investment held. So first of all, we calculate the total yield by both this dividend plan and the bonus plan, and then effective yield can be easily calculated. So first we approach the dividend plan. This date, investment, dividend payout, dividend invested. Dividend plan means whatever dividend is received has been reinvested. NAV, units, and closing units. On 1/4/2005, initial investment was made rupees 2 lakh, and the total NAV, which is arrived, which is given in the in your question also, is 38.2. So total number of units will be 2 lakh divided by 38.2. So it will be 5235.6. So closing units will also be 5235.6. So next day, when the dividend is declared, dividend is declared on this day, 30th of September 2005, 10% dividend. Now we write the date, 30th September 2005. The dividend payout 10%. And dividend, what is dividend total amount? We will calculate the unit with the face value, because dividend is calculated on the face value itself. That is the opening NAV. It is 10 rupees. So 5235 calculated as 5235.6 multiplied by 10 into 10%. Dividend is 10% into 10%. The amount will be same, 5235.6. NAV which is given on this 30th of September is 39.10. So this is 39.10. Number of units, it will be 133.90. How it is arrived at? We divided, because what happens is that whatever dividend total amount is there, we convert it into units and then total amount is reinvested. That would happen. We did in the previous questions also. So total number of units here it is given is 5 to the dividend reinvested is 5235.6. And NAV at that date is 39.1. So we divide this 5235 by 39.1 to arrive at the number of units, which is 133.90. So now, by way of dividend reinvestment, the total number of units added is this 133.9. So this 133.9 units, because of dividend reinvestment, is added to the units which already has 5235. Both these are added to 5235.6 plus this 133.9. So it will be 5235.6 plus 133.90 units arrived because of reinvestment. So what will the total amount? 133.9. So total is 5369.5. It is 5369.5. This is the position as on 30th of September. So now the closing units are 5369.5. Okay. Now, when the next dividend is declared on this 31/3/2007. Dividend payout 15%. Dividend reinvested, how the dividend is calculated? By the same method, that is this 5369.5, 5369.5, that is the closing balance, multiplied by 10, rupees 10, rupees 10 is the unit value, into what is the dividend rate? 15%, into 15%. Into 15%. So this way it will be calculated, the dividend for the as on 31/3/2007. So it will arrive at, if you calculate it, 8054.25. Okay. Now this 8450.25, what is the NAV on that date? That is 31/3/2007. NAV is 44.2. So we will divide this dividend amount, that is 8054.25, by the NAV, which is 44.20, to arrive at the number of units which will be reinvested. That is 8054.25 divided by 44.2. So it will arrive at 182.22. So total units will be 5369.5 units as on 30th of September, plus the units which have been added because of dividend reinvestment. So 5369.5 plus 182.22. This will be added. And final figure arrived at will be 5551.72. Again, next day when dividend is declared, it 15th of September 2008. See, 15th of September 2008, and NAV is 45.05 and dividend percentage is 13%. So dividend percentage is 13%. Again, how 13 dividend will be arrived at? It will be closing units. What is the closing units? 5551.72 multiplied by 10. That is the unit price. into 13%. So it will be 7217.24. So, and what is the net asset value? We have, it is given in the question on 15908. It is 45.05. So now we will calculate the number of units which will be reinvested. So this amount, 7217.24 dividend amount, and the NAV on that date, that is 15/9/2008, will be divided 7217.24 divided by 45.05. So amount which will be arrived at is 160.20. So now the total closing units will be this portion, 5,551.72. And now the units which have been increased due to dividend reinvestment, both this will be added. So 5,551.72 plus 160.20. So it will be 5,711.92. Now the next day on which dividend is declared is 27,309, is 16%. Again, how dividend is calculated? This total 5,711.92 multiplied by 10 into 16%. So it will be 9139.07, and NAV it is given on that date 44.80. And again, the total dividend received 9.39. 9.39 will be divided by 44.80 NAV at that date to arrive at the amount of dividend which has been reinvested. So it will come to 204 units. Closing units will be 5711.92 plus the units which have been added due to reinvestment, that is 204. So final amount will be 5915.92. Now we will calculate the redemption value. So total, you can say closing units 5915.92 on 2009. Please note that investment took place on 1st of April 2005 and it continued till 2009. So 5912 units into NAV on that date, and the NAV on the redemption date, it is given in the question itself. NAV on the redemption date 31/3/2010, it is 40.40. So we multiplied it by 40.40. Figure arrived at is 2,39,003.17. It is the total amount. And from this, in order to calculate the return, opening NAV, that is investment value, will be deducted. Investment value is given in the question, it is 2 lakh. It's given in the question, the amount of investment, that is 2 lakh. So opening initial investment will be deducted. So after deducting this, the final amount which is coming is 39,003.17. Now we will calculate the effective yield by the same formula, effective yield per annum. It will be 39,003.17 divided by the initial investment 2 lakhs multiplied by 100 into, actually this investment, if you see in the question itself, that it took place from 5 years. It is for 5 years. From 2005 to 2009, from 2010, redemption taking place. And now in this question, it is asking that effective yield per annum you have to calculate. So for 1 year, you will be calculating. So this figure, entire figure is for 5 years. We have calculated it. So we restrict it to 1 year. So it will be 1/5. Therefore, it will be 1/5. So if we calculate it, the final amount we will be getting is 3.90%. That is the effective yield in case of the particular dividend plan. Now come to the $182.22. 5369. Okay, fine. So I will just proceed to the next bonus plan. Date, amount invested, bonus units. Fine, you are getting the correct answer now. 3.90. Mansha Kirti, good. Bonus units, total balance, NAV per unit. Investment take place on 1st of April. Amount invested, 2 lakh. But total, you can say units are 5617.98. So how this total balance is arrived at? NAV is given, initial NAV is given in case of bonus plan. See, NAV is bonus plan, it is 35.60. It is given 35.60. So if we divide this 2 lakh by 35.60, we will getting this unit balance 5617.98. Okay. Now, the next day when bonus is issued is 30th of June 2006. This is the bonus issue date. This is the bonus issue date. 1:5 means for 5 existing units, 1 extra unit is declared. So it will be existing units 5617.98 and upon 5 means 1 unit will be issued for 5 existing units. So we will divide it by 5. So it will come to 1123.60. So this 1.1123.60 is the units have been increased because of bonus issue. And earlier the units were 5617.98. So we'll add this. Earlier the unit was 5617.98 and now the units have increased because of bonus issue, which is 1123.60. So the total units which is coming to is by adding this is 6741.58. 6741.58. NAV is also given in the question itself, which is 36.25. Now coming to next date, 30th of October 2008, when bonus issue is made. This date. 1:8. For 8 existing units, 1 unit is issued. So now it will be earlier previous unit is 6741.58. We'll divide it by 8 because 1 unit is issued in place of 8 units. So we'll divide it by 8. So figure we arrived at is 842.70. So earlier the unit was 6741.58. So 6741.58 and we add the additional units added because of bonus issue 842.7. So it will be 7584.28. NAV is given 38.30. Again on 11th, bonus issue is made. 1 is to 10. 1 is to 10. For 10 existing units, 1 unit is issued. And in this case, the total number of units earlier was 7584. And how much additional units were added because of bonus issue? Just calculate it. 7584.28 divided by 10, because one bonus issue in place of 10. So it will be 758.43. So we add this 758.43 units added because of bonus issue and the earlier units, that is 7584.28. So amount arrived at is 8342.71, and the NAV is given on that date also 38.90. So final closing units arrived at 8342.17. This is the total units. And then we can easily calculate the redemption value by multiplying it with the NAV as on the redemption date, which is 31/3/2010. It is given 39.7. So now calculate the redemption value. Redemption value is equal to 8342.71 units multiplied by 39.70. The unit net asset value as on the redemption date, that is 31/3/2010, this date, 31/3/2010, 39.7. Okay. Now what will be the redemption value? Just multiply it. We get the figure as 3,31,205.59. We multiply it, then we will deduct the investment value. Deduct the investment value to arrive at the return. So it will be 1,31,205.59. So from the, you can say, closing NAV, from opening NAV is deducted, and this will be the yield itself. So now calculate the effective yield per annum in this situation. Effective yield per annum is coming to 1,31,205 total yield divided by initial investment, that is 2 lakh. It is given in the question, 2 lakh multiplied by 100 multiplied by into 1/5, because we have seen also that it is held for 5 years and you have to calculate the yield for 1 year only. So it will be into 1.1/5. So the return yield is coming, total effective yield coming is 13.12%. I hope you are getting this amount, 13.12. Yes. Now the figures are arriving also. So this is the same way we have calculated effective yield per annum, but you can say the method approach is different in this case. So whatever dividend in the first method, in the first aspect, whatever dividend is received has been converted into units and they are reinvested. So final reinvestment amount is, you can say, multiplied by the NAV on the date of redemption, which is 31/3/2010, and we arrived at a total yield. And once the total yield is arrived, we calculated the effective yield also. Same is the situation with bonus issue also. Whatever bonus shares were added are further reinvested. So final units which have been arrived at on the date of redemption, that is 31/3/2010, has been multiplied by the NAV on that date, redemption date, that is on 31/3/2010 itself. We got the total yield. Once we got the total yield, we put the figures into the formula to get the effective yield also. So yes, we're arriving at the figure answer now. So let us proceed to the last question, which is question number 11. Now, just let us read this question first. And it is an open-ended scheme. There are 3 lakh units outstanding. 3 lakh units are outstanding with net asset value of 18.75. And at the end of the month of April, 6 lakh additional units were issued at the end of April. 6 lakh additional units were introduced. And it adjusted for dividend equalization. And now, student, you have must have heard this dividend equalization. Dividend equalization, what happens is that whatever dividend is declared, for example, any new unit holders is added in between. Okay. Say there were 9 lakh unit holders at the start of the year, and 1 lakh unit holders were added. And for the whole year, let us say the dividend is 20 lakh. And for the first portion, the dividend is say 15 lakh. For the first portion, let us say the dividend can be declared as 1.5 per unit, let us say. And the second portion, it is 1 per unit. You can say 0.5 per unit, coming to 0.5 per unit. And total return which will be declared is 2 per unit. So for the first half, it is coming to 1.5 per unit, and the second half, it is coming to 0.5 per unit. 1.5 per unit for the first half, and the 0.5 for the second half, after 6 months, say. After 6 months. If the figure is on 1st April, and you say additional unit holders would added on, say, 30th of September. Now, what happened is that the mutual fund companies or mutual fund, you can say, establishment or the companies will not declare the dividend for the, you can say, part year. For example, it is not declaring dividend for 6 months to the such and such holders and such dividend to such and such holders after 6 months. It will declare the entire dividend for the whole year. That is 2 per unit. That is 2 per unit. So what it will do is that the 1 lakh unit holders which is added, they ask them to pay this 1.5. Ask them to pay 1.5. And then after 1 year, it will pay all the unit holders at rupees 2. So once it is paid by the additional unit holders, it has been redeemed back. That is, they will get 1.5 they are getting, and they will entitled to get is 1.5, because additional unit holders entitled to get 0.5 only, right? Because the return which is coming from 30th September onwards is 0.5. So they are entitled to 0.5. So this way, this dividend equalization actually works. So total dividend which is coming 2 lakh out of 1.5 lakh, which is up to first 6 months. So when any unit holder is added to midway, for example, on 30th September, so they will have to pay along with NAV the dividend, which is for the first 6 months. That is in this case 1.5. So 1.5 will be added to the NAV, and that cost will be charged to the new unit holders. And at the end of the year, the entire dividend will be declared. So 1.5, which has been charged from the new unit holders, will be paid back to them. And 1.5 they're already entitled to. That is what dividend equalization is. So first of all, this is added back. So this way, basically the question is solved. Now let us proceed to solve this question. Question 11. Now it is units in lakhs. This is per unit, and this is total in lakhs. So first of all, we will calculate the income available for distribution. Income available for distribution. So income from April income from April, it will be units are 300 lakh and total income is given in the question, the month of April 22.950. 22.950. So we'll divide 300 units upon 22 point. So we'll divide 22.95 lakhs upon the number of units 300 lakh. We will arrive at 0.0765. Now dividend equalization will be added. Dividend equalization added. As we have just mentioned that whatever new units have been unit holders, the NAV from the NAV, the dividend will be added back and the means charged from them, and then it will be returned to them at the end of the year. So first added back dividend will be 6. Just see, 6 lakh unit holders has been added. 6 lakh unit holders were added. So 6 lakh, and they will be amount will be in proportion to income per unit 765. Multiplied this, you will get 0.4590. Okay. So now the units are 306 because 300 earlier and 6 lakh unit holders were added. 0.0765, 23.4090. Now, income of May. Income of May, it is given in the question itself that income from for May 34.425. 34.4250, and it will be divided by this the number of units 306. So per unit it will be, we will be arrived at 34.4250 per unit 0.01125. How this will arrive at 34.4250 divided by this 306. So now 306 units, 0.1890 units will be added. This 0.7065 plus 0.1125 units will be added. This will also be added. So the final figure will be now 57.8340. Less dividend equalization paid on repurchase. See, in the question, it is given that at the end of May, 3 lakh units were repurchased. Means the buyback means it is the units were returned to the unit holders. The amount has been paid. Whatever amount the unit holders and distributed has been paid to them. At NAV less 2% exist load adjusted for dividend equalization. The dividend equalization has to be considered. The dividend paid on that, since repurchase taking place, dividend equalization is deducted because of this. So this 3 lakh units, I mean repurchase 3 lakh. Okay, this 3, and the amount is actually will be multiplied by unit 0.1890. So figure will be arrived at, it will be in the negative 0.5670, 0.5670. So it is coming to 303 because 306 units earlier was there and 3 units was deducted to arrive at 303, and 0.1890, and it is 57.2670. That is 57.8340 deducted by 0.5670 to 57.2670. So now add income from June, add income of June. Income of June is already given to you, 45.45. 45.45 given in the question. Okay. And it will be divided, this 45.45 will be divided by 303 units to arrive at this per unit, that is 0.150. The figure will be 1.150. Now, total amount, it will be 102.7170 and it would also be added. So it will be 0.3390. Again, then dividend paid. Any information regarding dividend paid, it is given in the question also that at the end of June, 70% of available income was distributed. So 70% is of the dividend is distributed. So dividend paid is 70% of this. Which amount? This amount. 70% of 102.7170 days, which is actually 71.9019. And this figure is, this 71.90 will be this divided by this 303. The per unit will be arrived at 0.2373. So total it will be 303 and it will be 0.1017 per unit, and total again added. This figure is in negative because dividend is paid. 71.9019 will be negative figure. So final figure will be 30.8151. Okay. So now what is the second aspect of the question is available income available for distribution we have calculated. So how we have calculated? See, income from April, we added dividend equalization, then income of May, then we deducted dividend equalization paid because company is doing the buyback. Then income of June is added. Then out of the total amount, the dividend has been paid. This is the income available for distribution. Now come to the second part. What is the second part is asking issue price at the end of April. Issue price at the end of April. For this, first of all, it will be opening NAV. What is the opening NAV? Opening NAV is 18.750. 18.75. This is the opening NAV given because it is telling that 18.750 and entry load has also been given because in the question, what is given in the question that 2% adjusted for, it is at the end of April, it issued 6 lakh units NAV plus 2% load. This 2% load also. So entry load will also be charged. So add entry load. Entry load at the rate 2%. That is 2% of 18.750. So it will be 0.375. So it is coming to 19.125. Again, dividend equalization is added because from the new holders, it will be charged from the new dividend, new unit holders and added to NAV. At the end of the year, it is then again paid back because at the end of the year, total dividend is declared. Okay. So add dividend equalization. Dividend equalization 0.0765. It has also already been calculated, this figure. This figure 0.765. This figure is added. So now 19.2015 is the actually the issue price at the end of the April. Issue price at the end of April. Now, the next part of the question, what it says, repurchase price at the end of May. when the company mutual fund organization doing the buyback, what is the repurchase price at the end of the May? So it will be calculation of the repurchase price. Same, we will proceed by the same method. Opening NAV 18.750 is given in the question, and whatever additional information is given in the question, let us see. At the end of May, 3 lakh units were repurchased at opening NAV less exit load, adjusted for dividend equalization. Exit load is also there. So we have to consider the exit load also. So from the repurchase side, exit load is deducted. Exit charges are, we have discussed during our concept clearing in the earlier lecture, that exit load is actually charged from the investors. So less exit load, which is 2% of 18.750, which is coming to 0.375. So it is 18.375. Again, dividend equalization will be added because it will be the because this amount will be the return to the you can say the buyback holders. So it will be added, whatever amount it has been deducted will be paid. Dividend equalization. It will be 0.1890. See, dividend equalization at the end of this May with this 0.1890. This will be deducted. Okay. Now 18.564. 18.564 we calculation of purchase price. Okay. Now come to the last part. What the question is asking? Question is asking about the net asset value, that is the closing NAV. Let us calculate the closing NAV. Closing NAV will be calculated by the simple logic which we have discussed earlier, that from the opening NAV, total return will be added and any dividend will be deducted. From the opening NAV, all the returns will be added and the dividend will be deducted to arrive at the closing NAV. So the opening NAV is 525. 5625. How it is arrived at 18.75 rupees per unit is given in the question, multiplied by 300 units. Okay. Here, 300 lakh units which were there. Okay. And 18.75 is the opening NAV per unit. This is the total number of units, 300. So 300 into 18.75. This is the opening NAV, 5625. Fine. Now add the portfolio value appreciation. Portfolio value appreciation is also given in the question. See, portfolio value appreciation is given 425.47. So 425.47, it will also be added, any appreciation in the value of the portfolio. Then issue of fresh units. Some units have been issued fresh. Issue of fresh units. So how many number of units issued? 6 lakh units multiplied by the 19.2015. So 6 lakh units added, we have, it is given in the question, and at the NAV on that date, that is at the end of the April. say 19.205. That is, it is the price actually from at the end of the April. Okay. So it will be multiplied by, that is what is multiplied by 19.2015. Okay. So issue of ratio 19.2015, 115.2090. Again, further income will be added, income received. So income received, what is the income received total? This is 22.950, 34.425, and 45.450. Income for 3 months. All will be added. So it will be 22.950 plus 34.425 plus 45.450. All will be added and total amount will be 102.8250. So total amount, if you add all this, that is opening NAV plus portfolio value appreciation plus fresh units which have been issued plus income received. So total amount which is arrived at is 6268.504. And from this, the dividend will be deducted to arrive at the closing NAV. So it will be units repurchased. Units repurchase is 3 into 18.564. It is given in the question that 3 lakh units have been bought back, that is repurchased, and repurchase price is also given. This repurchase price 18.564. So this 3 is multiplied by the repurchase price 18.560, and the amount is 55.692. And whatever income is distributed, dividend is distributed, will also be deducted. Total amount of dividend distributed, we have already calculated here. Here we have calculated dividend paid with this portion, 71.9019. 71.9019. 71.9019. So the final amount will be, we added all the incomes, then dividend is deducted. The final amount arrived as 127.5939. It will be. No, after deducting this will be dividend amount. So final amount which will come at is, the final amount which will come at is 6140.9101. And this is actually what it is, closing net asset value. It is closing net asset value. Closing NAV. From this closing NAV, closing units are closing units. What is the closing units? Initially, there were 300 units, 6 lakh units added, and 3 lakh units repurchased, bought back, returned. So 300 plus 6, 306 minus 3, it will be 303 units. So now it will be 303 lakh units. So we divide the total closing NAV by the closing units, which will be 20.2670. So it will be closing NAV per unit. So that will be a closing NAV per unit. So this is what about question 6140.91? 40.91. Yes, Kirti, your answer is correct. I think other students have also been getting the answer. Any question on this? Otherwise, I will wrap it up. And in case of any further doubt, you can always write to us. You can always say download the mobile app. So you can get back to us at this number 0120 3045 956. We will happy to entertain you. So thank you so much. Thank you for your patient listening.
Thanks a lot, Vivek sir, for
Thank
sparing your precious time and enlightening the student on this topic of mutual fund. Now, student, with this, we have come to end of the topic of the mutual fund. Of course, I have observed that a lot of calculations are involved. My one or two tips to you, student, please, whenever you carry out any calculation, be patiently calculate each and every calculation, because sometime in hurry, you can, if you skip at one point, you make wrong calculation at one point, then afterward your complete answer will be wrong. Of course, stepwise marking are there to take care of your previous answer, but it will be unnecessary. You will lose marks in the examination. So, student, now thanks for your patience listening also. Now we shall come in the next class and with a new topic. Okay, students, have a nice day. Thank you, Vivek sir. Thanks a lot.
you, sir. Thank you very much.
Session over.